the market's collapsed. Bitcoin is at 69. You can't even make this number up. 69,000 on the Bitcoin side of things. And the interesting part about this sell-off is that that may be considered to be like a beginning of the bear market, and the liquidity is moving out of the crypto. Is that really true? So my view is very different on what is happening, and the team shares this view completely. So we believe that the bear market that started around June of 2022, right here, right? So that's where the rates started being increased. Good morning, Mr. K. That's where the rates started getting increased by the Federal Reserve to fight inflation. We left the ZIRP environment, zero interest rates, and went into the 5% hike. So stocks sold off for that year, and crypto sold off as well. And that was the beginning of the bear market. The reason why I'm saying that's the beginning and that's the continuation of the bear market. Now, like it's a little bit challenging to see that, because we see the Bitcoin at 17,000. We see now the Bitcoin here at 120. So it went up almost 7.5x. So how could this be like a bear market? In reality, all this has been driven for the most part by institutional investors for the BTC. Now, we don't see that same situation, for example, with Ethereum, right? So Ethereum just didn't get the ETF, and they're supposed to be correlated with each other, Bitcoin and Ethereum. And check this out. So this is 2022 November, whatever, right? So 1500 definitely went up a couple of times, went up to 4, then down to 1500, went up to 4.5, down to almost like, well, it's not 1400, it's 2000, went down to 1800 just the other day. But it's not that Ethereum is really necessarily moving up. And of course, we can say, well, Ethereum doesn't have a limited supply. It's not, it's not limited. It's not finite. What Bitcoin is, but Ethereum currently does not experience inflation because the fees are being burnt, the gas fees. So therefore, the Ethereum at the moment, today, now not necessarily from 10 years from today, but today, Ethereum is actually not inflationary. However, Bitcoin is inflationary. Again, today. So, of course, everything that matters is, what's the forecast for the next 10, 20, 30, 50 years. But the reality is, pretty much nothing except Bitcoin really went up. Like, BTC is the only crypto that went up. And, of course, BTC potentially is the only crypto that matters. I get that. And I may even share that view, too. Like all this other stuff, including Ethereum, is just shitcoins. Let alone Tether, let alone Circle, let alone Solana, let alone, I don't know. It's hyper liquid, right? So we believe that the bear market did not end since 2022, and that's perhaps the longest bear market, despite the halving in Bitcoin. That's perhaps the longest bear market. It's been 4 years now. Now, what evidence do I have that this is a bear market? Well, let's look at DeFi TVL. Perhaps that's the important situation to consider. So we do have Ethereum 55 billion TVL. That's the first mover. And Solana, with all this, with all this noise, it's only at 6 and 6.3. So despite all this VC money, poured into Solana by institutional investors and by enterprises. But we don't see anything else. We don't see new names. That's the most important part. We see some EVMs, not necessarily like dying, but kind of preparing to die. We see some new names with Plasma with 2.9 billion. I don't know what the frick they do. Hyperliquid with 24 validators, 4 or 5 of which are controlled by the team, who essentially, portray themselves as essentially the next BNB, BSC chain, right? So 1.5 billion. Provenance, never heard of them, 1.1 billion. Inc, 450. Think about 450 million is similar to Starknet with 287 chances it's all VC money. What we don't see, again, as I keep saying this, we do not see utility. We do not see utility. So it's nice to look at the bull market. The bull market, synthetically organized by the institutionals. But we need utility. The biggest criticism of Bitcoin maxis, who have been awfully quiet, by the way, with this whole Epstein filing case is the fact that the maxis of BTC were supposed to create a new ecosystem, right? But all they're trying to do is they're trying to pray that the next institution or the next sovereign government is going to make Bitcoin a national reserve and the price is going to skyrocket, right? So that's the biggest criticism of the Bitcoin maxis. The Bitcoin maxis was supposed to create a new ecosystem, the new elite, right? That will be fighting the current elite from the current economic market conditions, right? And kind of the market structure controlled heavily by monopolies of all kinds, all going back to the centralized authority called the elite behind essentially the Western world. The problem is Bitcoin failed to do this so far, right? Because all this adoption by the institutionals is obviously fugazi. It doesn't really help. What I'm trying to say is, if Bitcoin now drops to, currently it's 69, right? Okay, 69. I can't even make this up, okay? That's, if it drops to about 30, 25 to 30, which is the fundamental level of Bitcoin, it's still okay. It means that the institutionals went up, and hopefully some of them got burned. Hopefully. Unlikely, though, because they probably just collected on commission. Coming from the ETF expense ratios, coming from the transaction fees, because in developed countries, we are forced to report stuff, and we are therefore it's better for us, therefore, just to trade institutional products such as ETFs. I'm not saying you should, I'm just saying from tax purposes, many people just do that instead of holding the native coins, which is the right thing to do in your native core wallet. So I don't see any problem here. In fact, if it keeps dropping lower, that's perfect. Let institutions die. What I want to emphasize, so how is this related to Ghost? And some whales are pretty vocal about trying to time the market and trying to time the right kind of time to launch. And that's important. In fact, timing, as found by many startup studies, is the most important aspect of the launch. Not the team, not the product, but the timing, because timing comes with product adoption, with the need from the market, with the forces essentially going with the flow, right? Like if you caught the flow, you're golden. But timing the market is something which is extremely difficult to do. It's not difficult to do from perspective of you need certain skills. It's more like it's pretty random. So timing is random. Since it's random, what's the point, right? What's the point of trying to guess it and getting it wrong, right? Of course, to calm yourself down, fine. To calm your thoughts down that you've done everything you could possibly. However, outside of that, there's not much merit to trying to time the market. It's all about, are we prepared as a community? Are we prepared as a group? So from this kind of from the market sell-off one, a number of cryptos went down. What's interesting to see, and I mentioned that to the council yesterday. What's interesting to see is there are certain cryptos such as Monero and Zcash, which were a lot lower in this hierarchy of top coins on crypto market cap, on coin market cap. So they've been top 50, top 40, but now surprisingly, miraculously, Monero is top 17. Zcash is 24 due to the recent pump. So it's interesting how potentially delisting of these privacy coins from centralized exchanges is actually working for them, all right? Because there's no selling pressure, meaning there was no no unnecessary buying pressure previously, which was fake, and now there's no selling pressure, right, to cover that buying pressure by the same institutions. So there's less volatility, and therefore it's actually becoming more stable, which is very, very interesting. So, so to answer the question that some of you guys may be potentially asking, oh, so now the crypto is going to be bleeding. What do we do? Do we delay the launch because of this? Or, the world is going to die. The cryptocurrency is going to die. We must remember one thing. We're not here for the price action. Price action is a consequence of properly built infrastructure, similar with Bitcoin, similar with Ethereum, right? You cannot, think about this. if you close your eyes and you do not know the price of Ethereum, and then I ask you that price, what the price of Ethereum in the next month, like you don't check the markets, you just close your eyes, don't watch the news, and next month I'm asking you, what is the price of Ethereum? You're not going to be able to tell me because the price of Ethereum is very subjective. To think that a blockchain would be worth 200 at this point of time, $245 billion is unprecedented. It's absolutely unprecedented. Why? How do you even substantiate such high valuation? However, apparently there's a lot of utility. Apparently there's a lot of promise. Apparently that's what investors are thinking the valuation is. At the moment, investors are often wrong. Not often, a lot of times wrong. And maybe the valuation is a lot lower. Maybe the valuation is actually a lot higher. But today it's 250 billion. And it has been pretty stable like that, right? So I'm not talking about some, all of a sudden meme coins that catch up some huge valuation and then drop. Ethereum has been holding up to this valuation for quite some time, but you're not going to be able to tell me exactly why the valuation is this. But there's clearly utility from Ethereum. Lots of users are using it. There's massive TVL of $55 billion, which is difficult to substantiate just by VC money. Now, we can substantiate some of this TVL, for example, with Starknet. Starknet raised $200+ million. It's extremely likely that another 287 came from VCs, right? Because it's very relative. But please show me a VC who has access to $55 billion. Now you can argue the same thing for Solana. Show me a VC with $6 billion from of liquidity available. But obviously it's multiple VCs backing this up, right? And we need to yet look at the utility of Solana outside of the meme coins. We need to yet look for the innovation, true innovation that came out of Solana. Please tell me a truly new, amazing protocol that went from Solana, right, and migrated to other blockchains. That happens on Ethereum. For example, on Ethereum, we have Uniswap. Uniswap did, specifically V2 Uniswap, did so well that a bunch of copies of Uniswap V2, as far as the bonding curve on the back end, as far as the LPs, right, that structure got copied over amongst a bunch of dexes, 1inch, SushiSwap, and so on, including Radium and all the other dexes on Solana that got inspired by the Uniswap. Now, tell me a protocol on Solana that became so fucking amazing that other protocols got inspiration from it and launched on Ethereum. And that's your answer to who is providing this $6 billion liquidity, right? So then to go back to this kind of question that many are asking, but okay, so how is Ghost going to be impacted by this significant sell-off? And the answer is it's not going to be impacted. Why? We need to be not focused on the price action. We need to remember why we're here. We are here amongst other pure Web3 projects to create the new elite. Once we create the new elite or gather the elite that wants change, we will be successful. But we must provide utility. The utility must be provided by uniting different isolated Web3 islands together, such as Bitcoin, such as Ethereum, such as Dogecoin potentially, maybe Tron to some extent, because of the Tether play. Monero, Litecoin, maybe Zcash. Who else here? You got the point, right? So we need to provide true utility, and we need to provide the utility so strong that that utility is used to replace partially and hopefully fully the existing financial system. That's the only way how it's gonna work. We're not here for the fucking price action of 20% up or 20% down. It's irrelevant. We're here to truly disrupt the financial system. Now, RW, real world assets, will that be useful for us? I think we said here, you've been asking this question. Potentially yes, potentially no. It's just more adoption of crypto overall. However, for the most part, RWAs will be controlled by centralized issuers such as JP Morgan, such as BlackRock, such as Vanguard. We know the usual suspects. Those usual suspects will not give you the control of the backend. So therefore, what's the point whether those real world assets have been trading on the exchange, or they have been trading on the controlled blockchain. It doesn't matter. It's the same shit, right? We need to make sure we control it. We need to make sure we control the data. We control the flow. Nothing can be gamed and nothing can be hacked. That's what we're trying to do here. So 20% up, 20% down, we don't care. The financial ecosystem is trillions of dollars. Trillions. And we're not here to disrupt the trillions of dollars. We're here to disrupt value, because trillions of dollars are valued in dollars, right? What is it value? What about value in gold? What about value in euro? What about value in some whatever XYZ currency? So we're here to disrupt, to bring value. We don't like, it's nice to put a number to it, right? Like, oh, we're gonna disrupt, like, whatever it is, like multi-trillion-dollar industry. But we are here to bring value. We're here to replace the old, corrupt, draconian, all-controlling system that's becoming ever more controlling. In fact, recently, watched this interesting video that pretty much explains what's happening. So, quick story. So we have essentially capitalism. That is the world order, and the world order is to some extent failing. Why? Well, because people are unhappy. So you definitely have a small cluster of people who are at the top of the game, who benefiting from it, who parasiting on the system, and then you have the majority of people, 99%, for whom the system just purely doesn't work. Right? And we're talking about both emerging countries and developed countries. So the argument goes like this: the 20th century was the century to see if capitalism could be replaced with something else. And they tried with communism, and they tried it with fascism / Nazism in Germany, right, and Italy. And both of those attempts failed. So Second World War was capitalism against fascism, and the Cold War was capitalism against communism. So capitalism won. However, just like any system, capitalism has issues. So people are just unhappy, the inequality increases, and the system becoming more and more corrupt. And the person who is saying this keeps arguing that there are only three ways out of this. So the three ways out of this capitalistic global order is: option one, the world becomes a zombie society. And that's what most of us are today. Zombie society. We have no fucking control. We have no energy. We have no desire. We have no motivation. We just go to work, do our business, earn money. Money is everything. Money, 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 money. We have to pay the bills. We have to pay the bills. We have to pay the bills. Yes, that's a zombie society with no creativity. Zombie society tends to essentially kill itself, right? In the long term. So we have no kids. Great example is Japan, South Korea, with US as well, with very, very low population. The only exception to this rule so far is Israel, but Israel has a very energetic society. Very energetic society with is a very, very small community, I would say, right? With massive population growth. But all the other developed countries, including US, Canada, Australia, Japan, South Korea, very, very low population, because the society is not energized anymore. So that's the first option: go zombie society. Second option is to go towards essentially totalitarianism, right? And arguably, while totalitarian regime may sound bad from the side, but in reality, totalitarian regime makes society more energized. And the person is arguing that who will win? Who is likely to win, South Korea or North Korea? North Korea. Why? Because North Korea actually has people believing in the future, and that shows itself through massive population growth in North Korea, right? Compared to South Korea. Best example. So yes, there's some level of theocracy, some level of totalitarianism in North Korea. However, and from the side, it may seem that it's bad for the people, but people are actually happier. Okay. And then the third option, he says, and by the way, we see that, right? We see that with with elites becoming more and more centralized in the U.S., with a bunch of more dictatorial type of powers being experienced all over the world in different nations. I'm not going to name them, but you know them all. And then there's a third option. And third option is a new world order through the person says, like, essentially through small world, right? So essentially, the person is saying like, okay, so the world is becoming too big, in which capitalism is the only system that can work. So therefore, the only option is to minimize the population. Essentially, new diseases or global hunger or no supply of clean water and stuff like that. That's the only way out, long term. However, the third way has a nuance. The small world does not mean that it's a small world. Like, it does not mean that, it doesn't have to mean that it's, oh, today we have 8 billion people and we absolutely must come down to, I don't know, 100 million to then experiment with better governmental structures. I believe that this interpretation should be very different. We have 8 billion people. Let the population keep increasing. Let it be 9 billion. Let it be 10 billion. Doesn't matter. Let's just create some level of tribalism. Let's just create new cantons, right? Global cantons responsible for this or that. Like, that's what we've been saying with Ghost. Let's create some type of global, international, kind of like essentially network-based, in this case, technology-based societies, right? Internet was trying to do this, and internet should try to do this with forums and stuff and different online organizations. And with blockchain, we can enforce many things such as financial system, also being powered by the internet layer for communication purposes, right? So it's a very interesting discussion. So what I'm trying to say is price action. Who cares about the price action? We're here trying to create the new world order, right? We're trying to experiment and bring the new world order where our supporters, the whales, and I'm not talking about just Ghost, I'm talking about any Web3 project. We get together and we become the new elite. Now, the fact that AI could offer something similar is absolutely false. It can't. AI depends on centralized computational services. Now, we can say, well, let's try to decentralize it, through like something blockchain oriented. But thing is this, centralized computation services will always be better than decentralized ones. So the decentralized ones are simply just not competitive. Simply not competitive in the task that needs to be done, which is analyzing data. So it's going to be centralized data servers. Now, for centralized data servers, we must understand that software wears off. And when it wears off, it needs to be replaced. So we're talking about massive capital inflows. Also, since it's very physical in nature, it has to be protected. So it has to be domiciled somewhere with enough security. So chances are it's going to be under some type of government control. So AI is a government project. Any AI is a government project. And current elites will not let you become the new elites. Yeah, certain members within the existing elite may arise, such as Sam Altman. He is not a new guy. He's the member of the existing elite. Same as Elon Musk. They're all members of the existing elite. Not possible to replace them. Too bad. They all have been or wanted to come to the island. In case of Elon Musk, he was just told to fuck off. But he wanted to, right? President Trump, same thing. Everyone to the island. Everybody's part of the existing elite. So if somebody said, oh, like whoever becomes the new, like this, the Alexander, whatever his last name is, who got bought by Facebook and offered like $20+ billion, the fucker is not self-made. Don't you think that the guy is self-made? Absolutely not. He's representing one of the arms of the existing elite. Don't let them fool yourself, right? So what's happening is the AI, therefore, is going towards this totalitarian angle that we described, because nobody wants a zombie society, right? Because zombie society means low population. Low population means lower taxes. So you need more people. You need more resources. You need more energy from those people. So you need to milk them, right? So therefore, nobody's interested in zombie society. So therefore, it's going to be more towards totalitarian regime. That's what we see in China immediately. Population went up. What happened? More totalitarian. The United States is going that same exact route. Same thing with Europe, right? All going through the same exact route of making stuff more controlled. It's not by accident. It's the world is going towards that more totalitarian regime, because that's the only way to ensure that we don't turn into becoming a zombie society. So we become a very flourishing society, kind of going forward. But we, as part of pure Web theorists, we say fuck that. We don't want that. We want to exist. We want to live free. The only way for us to live free is to create our own ecosystem. But then we have to have the financial rails for that, and that's where Ghost comes in to unite the existing Web3 infrastructure, existing and future Web3 infrastructure. Okay, so forget about the sell-off. It's not important. Focus on building the ecosystem. All right. On this note, let's dive into the product updates. We have a bunch of them. They have been shared during Ghost Whale. So those of you who do not attend the Ghost Whales, you shall, because we cover lots of interesting stuff there. Okay, so first things first, the most important is the launch of CASPER 6.0. CASPER 6.0 was a forced move because CASPER 5.0 got desynced. Now, why it got desynced? So we got failed RPCs on the list because the current infrastructure of Web3 is pretty shitty. So some public RPC endpoints fail. Specifically, the one that failed was 0xRPC.io. It failed for everybody or for most of the validators, and therefore most of the validators became inactive. And then when more than 1/3 n plus 1 validators became inactive, the chain got desynced. And now the question is there any good resolution against this? The answer is no, unfortunately. There's no good resolution. So we are following this kind of vicious circle, potentially, where if all validators are following the same exact list of public RPCs, we may run into the issue. Because if the same RPC fails, it fails for everybody. So the only way to ensure resilience of the network, of the Ghost network, is to use different RPCs. So the list of public RPCs is available. And of course, the best way is just to proceed with your private RPC. I know Mr. IDK is running something or trying to run something. That's the right, absolutely the only right move, essentially. Now, those of you who don't have the opportunity or possibility to run private RPCs, you have to figure it out because otherwise you're running the risk of being slashed. So what you should do is, first of all, you wrote the script, wrote the commands, put them in Ghost Whales about how to check RPC and various public RPC endpoints when it comes down to being pinged from your specific device, from your specific machine. So check that. So that script is very, very useful. It's very easy. It just pings all the RPCs until it gives you a quick report of which RPCs are available and which RPCs are given what type of block height for both Sepolia and Mortar. However, there's no guaranteed resolution, unfortunately. Just like with Bitcoin, there's no resolution. If all validators tomorrow decide to stop mining, too bad, guys. Like the network will be taken over and all the balances are going to be rewritten. So the 51% attack is a real threat every single day. So your Bitcoins, for example, if you hold any, or your Ethereum, if you hold any, is fully in control of the existing validators. And there's nothing you can do. Same thing with RPCs. There's nothing we can do. We just must be better as a network. So we must be better as validators and try to decentralize our RPCs. Now, next point, the comparison of CASPER 5.0, which existed for just 2 months. We launched it end of November, and CASPER 6.0. So in CASPER 5.0, the structure was this. From the list of publicly available RPCs, which you could have customized, by the way, one RPC every 5 seconds is taken, and that RPC is the source of truth for this 5 seconds. And that RPC is giving you, as a validator, the block height, the block number. Now, that block number is being portrayed to the rest of the validator list using the gossip protocol, and then if you, and that's pretty much it, right? So, and then we compare each other, and if your RPC is out of sync, then you are being disabled. So, like, if another validator sees that your block number is too low or something is too high, that validator tells other validators to check you, and then everybody starts checking you, and if they see the same thing, then you will be disabled, right? So that's how this works. Now, with CASPER 6.0, so the problem was that if there's at least one malicious, at least temporarily malicious or inactive RPC endpoint, such as 0xRPC, then that 0xRPC starts giving you 0 block height. What do you do with that? Well, not much. You cannot do nothing except for excluding it. But, let's assume you're sleeping. There's nothing you can do, right? So what we do now with CASPER 6.0 is we are pinging all RPCs at the same time. So all available RPCs on the list that you selected, by default, all public RPCs could be available. So all RPCs being pinged every 5 seconds. And then we are looking at the RPC median. And then if there are bridge transactions, we are forming a hash out of those bridge transactions. And we're looking at the mode. So for the RPC block height specifically, we're taking the median. for the bridging transactions, we're taking the mode from the bridging transaction hash. So we are hashing every single bridging transaction. If there are two of them, we adding the first hash to the second hash to, to get the kind of hash A plus hash B gets you hash AB. Then there's a third transaction, transaction C. Then you have a hash ABC. And then you look at kind of what hashes would be produced by every single RPC, and you selecting the most repetitive hash. That's called the mode, right? The most repetitive data point in a data set. So that's the difference with CASPER 6.0. We were able to do this within a week. Kudos to the team. All this was done within a week. As I mentioned during the Wales Wednesdays, we must appreciate typically such changes take a quarter to 2 quarters. And that's like typical. That's like of successful teams. It could be a year for unsuccessful teams. The fact that this was done within a week is only kudos to Pierre, kudos to the team. Like, it's insane. The speed of implementation is absolutely fucking insane. Now, the other thing is progressive slash and CASPER 5.0. So the progressive slash, let me just explain this in one more time. So the first 9% of validators don't get slashed based on the slow clap mechanics. However, so let's assume we have 100 validators. The first 9 validators would not get slashed. Now, validator number 10 would make all 10 validators being slashed. That's how it's supposed to be. However, with CASPER 5.0, we didn't have it like this. With CASPER 5.0, it goes like this. If you are lucky enough to become the first 9 validators who are inactive, you're just not going to get slashed. You're going to be disabled, but not slashed. Only validator number 10 will be slashed. And that's not how it was supposed to be. Because the idea is, if 10 validators are inactive, all 10 must be slashed. So that is fixed in CASPER 6.0. And as far as forced chill, so we still don't have forced chill in CASPER 5.0 on the UI. And we don't have that on CASPER 6.0 either, because it's just a separate task which needs to be properly designed on the user interface perspective in Ghost DAO and potentially Ghost Lite. So we just don't have time for that right now because we're busy with Ghost governance or Ghost DAO governance. So therefore, we just prepared a forced chill script that anybody can run, and we'll be running this on the backend ourselves to disable any validators that should be disabled, essentially. Okay. The other thing is CASPER 6.0 updates here on the variables front. So minimum nominator bond right now is 0.69. It used to be 6.9. So now with just 0.69 CASPER, you can become a nominator. That's a much, much lower barrier to entry. Minimum validator bond is 6.9 as before. Now, maximum validator count is 69 validators. Before it was 1,000. So what it means is we need to test the strategy of the mechanics of the chain, where if we have more than 69 validators, let's assume we have 100 validators, only 69 validators will be validating for that specific era, for the specific day. What happens to the other 31 validators? Well, the other 31 validators are missing on the bridging fees, but not necessarily, because the other 31 validators can automatically nominate the 69 validators that have been elected. Now, what is the process of electing the 69 validators out of 100? Well, very easy. Anybody can become a validator for that specific era. However, the probability of your node, of your validator node being elected in that specific era is proportional to your stake. So the higher the stake, the higher the probability that you'll be elected. So for example, Mr. DK, since you're on this call, you have 6.9, thank you so much. They have 6.9 bond, and I have 69 bond. So you have 6.9 CASPER as a bond, and I have 69 CASPER as a bond on my validator node. So both of us can be elected, but I will be 10 times more likely to be elected than you in that specific list of 69 validators. That's all. Now, again, if you have 100 validators total, 69 are elected. What to do with the other 31 validators? The other 31 validators will be using the nominator feature to nominate the existing the selected 69. Currently, nominator feature is not used very much, but it should be, and it will be. And one of the reasons why it shall be used by is will be used by the existing validators who are not elected. Now, why did we drop the minimum to 69 validators? Well, on the mainnet, the highest shall be about 1,000. That's what Polkadot's Gavin Wood estimated. 1,000 is, it can handle 1,000 validators at a time for that specific era. But we can have, of course, more than 1,000. Let's say we have 5,000 validators, of which 1,000 will be validating for that specific era. The other 4,000 will be on the sidelines, nominating those active 1,000 validators. Now, the reason why it's 1,000 is we can make it, we can increase it, we can make it 10,000, we can make it 100,000, but then we'll have to increase the minimum requirements for the validated node. So it's always a balance between that. So if you want to keep being permissionless, from perspective of, like a pretty cheap machine becoming a node, we could just keep it at 1,000, and that's going to be fine. The other thing we could do is increase the block time. So we can increase from 1,000 to say 10,000 validators possible to be elected during every era. But then in that case, it's not going to be a 6 to 8 second time block. It's going to be maybe, I don't know, 20 seconds. Maybe it's going to be a minute. All right. So always these trade-offs exist. So they are kind of the best way is let's have 1,000 validators. That's what Gavin Wood decided. Let's have 1,000 validators, 6 to 8 second block production time, and sufficiently low minimum requirements. And that's kind of what we follow in here as well. And it's going to be kind of 69 for maximum validator count. That number, it can be adjusted by the Ghost governance, comprised of Ghost Council and Ghost Whales and stuff like that, right? So, and other users and validators, obviously. So this number will be changed. It can be changed. It's a very flexible number, but we're going to start with that. So the goal for us right now, therefore, is to try to get to 70 nodes in C. That will be interesting to see, right? So that's kind of our little goal here for the entire group. Now, maximum nominator count is 420. I think it was 1,000 as well. Now it's 420. I don't think we'll see much of it, much of the impact on this on the testnet. So it's going to be mostly for the mainnet. Although if you do get 2,000 validators, that would be nice to see as well. Now, RPC vision. So that's another thing very important. So we need to be making that decision, all of us, independently, and then sharing with Ghost Whales, and then we need to get to a consensus of what is the vision. We had this discussion with the team. There's not how to say, there's a definitely a long-term alignment of what we want. We want all EVMs long-term. The question is how we get there. And there are multiple ways to get there, but overall, as far as RPC vision, we can either shoot for all EVM chains, or we can go just for the selected EVM chains. And what's the difference? EVM and UTXO chains as well, right? So, and what's the difference? Well, let's look at it. So, if we want to realistically go for all EVMs, we must be cognizant of the fact that RPCs for those EVM chains will be total shit, public RPCs, right? We saw this with Mortar. For example, my node got disabled yesterday. Out of 3 RPCs on Mortar, 1 is not working for me. I'm banned. Maybe it's Geo, maybe it's something. So I only have 2 active out of 3. And what happened yesterday, I got disabled because specifically, like Cipolla is doing fine, but specifically on Mortar, I got delays. It blocks. So it seems like I got timed out for like half an hour or so. And of course, I got disabled. So I had to, essentially fix this. And I'm not sure if I fixed it. So we're going to be looking into the logs and, of course, presenting more commands to anybody who has similar issues. I essentially went through a proxy and directed my traffic through a proxy, and it seems like it's working. So it's probably my Geo. But what I'm trying to say is, like, that's Mortar, and the fact that we have geo restrictions in a pure Web3 project such as Mortar, Ethereum Classic, is pretty fucking pathetic. Another pathetic thing is we only have 3 RPCs available. Like, that's even more pathetic. I can understand if you had 30 and then 3 failed and we had 27 remaining. I would understand that. But we have 3, 1 is inactive, and I got timed out on the 2. Like, that's just bad. So now, is that situation different with other blockchains, EVM chains? No, same thing. Pulse has something similar. Base has something similar. Like Aurora, Astra have something similar. So all these chains will have 2 or 3 RPCs. And relying on 2 or 3 RPCs, public RPCs, is it's a very risky move because you can be slashed with real money. So what to do on the mainnet? Well, the best solution, I think, was what Mr. IDK is doing, what we consider to do as well on the team level, and what I know for sure some clusters, like I think by Warrior trying to do, is to build a network of private RPCs. And that's exactly the right decision. Because private RPCs can handle anything. They're not geo-restricted because it's your RPC. You can do whatever. Like, that is very, very safe as long as your private RPC is operating 24/7. If it's operating 24/7, amazing. Like, you got it. The other thing is maybe makes chain stop fucking around. Now, how? Well, of course, if you help chains bring more liquidity through bridges, right, through moving liquidity out of sexes towards dexes, maybe chains will start reviving themselves and they will start fucking around and they'll start presenting more RPCs available, right? More users will just start running RPCs. Uh, and then the other solution is some type of creative subnets of community run RPCs. Like, let's assume Mr. IDK gets together with Warrior, gets together with Sparta, gets together with some other whales. And now, boom, they're running like some type of subnet of RPCs shared with each other. So, Mr. IDK, you only need to run RPC for Mortar Classic, Ethereum Classic, and Warrior will be only running RPC, private RPC for, I don't know, Pulse. And then Sparta will be running only RPCs for private RPCs for, I don't know, Aurora and Aster. So that way you can decentralize who's running what, and maybe that is the way how we can kind of go forward. Who knows? He said, okay, is writing. We write in failover scripts validators so they hit more. Oh, one second. Let me just read that because I don't see the full question. We write in failover scripts for validators so they hit more than one public RPC endpoint. There are also paid RPCs, correct? Seems like a failover feature would be good. Absolutely. Yes, something like that would be good if your private RPC fails, maybe kind of going back to, either public RPCs or going back to infra. In fact, just because you have private RPC doesn't mean that you shall exclude public ones. You can just incorporate the public ones plus the private ones, right? And then our algorithm, which is already built for CASPER 6.0, will just look at the median RPC for all of it, and the mode for the bridging transactions. But overall, while this sounds like an issue that it's our issue, it's not our issue. It's the issue of chains, right? We just happen to be in a position of helping bridge and therefore helping kind of improve on the existing infrastructure of those Web3 projects. Now, the other vision may be selected EVM chains. Selected EVM chains where it's like, okay, you know what, screw that. We're not going to go for 30 EVMs and 20 UTXOs. We're just going to do Bitcoin, Ethereum, and Tron. We're going to do, 2 EVMs, which is Tron and Ethereum, and 1 UTXO. Is that the vision? Who knows? Maybe that's going to be sufficient to proceed with 90, 95, 99% of all the bridging transactions possible. And maybe that's going to be the case. Likely that's going to be the case. However, there's always going to be evolving players. What to do with those? Such as, I don't know, the next big thing. By the way, the best example potentially is Monero. Maybe even Ethereum Classic could be an even better example. Something is telling me that Ethereum Classic could revive very, very soon as well. Just because the community is right, just because they stayed right to their principles, just because they're proof of work still, which I am having more and more sympathy towards proof of work consensus protocols. All right, so now on the Ghost DAO governance, so it's coming up any day now, finalizing UIs, and there are 2 decisions that we made that will be available in the first version of Ghost DAO governance. Maybe that's going to be the last version. Who knows? But in case that's not the last version, that's the first one so far. So, 2 things. First of all, link to proposal discussion. So, the Open Zeppelin protocol implemented a hash with limited length that will be signifying the URL, for example. The problem is, while you can encrypt the URL, you cannot decrypt it. So there's no kind of much point from this hash. So therefore, the idea is Open Zeppelin, therefore, by default, does not incorporate any URL. So we could have expanded the backend of Open Zeppelin governance and incorporate the URL, not a problem. However, that would come with additional gas fees. Now, if you do this, right, then we'll have a back compatibility. We're working on creating a forum. We're looking for a good name for the forum. In case you guys have some ideas, please let us know. It's going to be, a community-owned forum, where community can be contributing, with potentially, at some point in time, potential migration of ghost whales to the forum. Who knows? But essentially, it's going to be a forum where the governance decisions will be discussed. They cannot be discussed in Wales because stuff will be lost in translation. So we must put that somewhere in a more structured format, such as a forum. So while it's possible to go from forum to Ghost DAO, why? Because on the forum I can create a thread and I can link that thread while creating the thread or later and say, hey, listen, like here's the URL to here's the number of the proposal on Ghost DAO. So I can do that link. That link is possible. But then if you also incorporate the URL into the smart contract, then the Ghost DAO back to forum will also be possible. So if I go to the Ghost DAO and look at the proposals, I'll be able to identify exactly what the URL is for that specific proposal. If you do not include the URL, the linkage is only one-sided. It's only from forum to DAO, but from DAO back to forum is going to be difficult. So we decided to proceed with the second option. I'll explain why. It was a very, very difficult decision, but essentially it's saving on the gas. And we just didn't have a very strong opinion. Like some of us at some point in time during discussions had the strong opinion, then we didn't. Then we had it again, then we didn't. So it was not like a hell yeah type of moment. So therefore we're like, you know what, for now, let's just not do a URL. And it will definitely be a saving on the gas fees anyways for those who create proposals. Now the second consideration was proposal iterator. Do we iterate the proposal numbers, like proposal 1, proposal 2, proposal 3, or do we just create hashes? So it's very difficult maybe to imagine what I'm trying to say, and maybe it's better just to demonstrate this. So let's go back to the screen here. So I am referring to, so we go to the governance. You don't have this access yet. This is a local host, but this governance tab right there. So the idea, first of all, was do we have the discussion URLs? And the thing is, we won't have it, so this column will go for now. And the second thing is iterator. Do we have this iterator, GDP, which is Ghost DAO Proposal, GDP? So 1336, and then GDP 3035, and then GDP 1334. So do we have this iterator where proposals get, like +1 as far as the ID, or not? So we didn't have a hell yeah type of moment, so we just stick with no iterator. What it means is GDP, it's not going to be GDP 1336, it's going to be GDP ABCD, or GDP 0x17, or GDP LM, whatever, YZ. Like, it's going to be something like that. So whatever the hash is, whatever the last 4 digits of the hash created for that specific proposal. So we'll see how this all plays out. Now, as far as this user interface, so we'll have this vote ends. So kind of when you can kind of finish voting. This is going to be the statistic about the current proposal where this is for, this is against, this is minimum quorum required. You'll have 3 different tabs: active, voted, and created. So active is the last 10 proposals historically. Voted is the ones that you voted for. All the proposals you've been voted for will be saved here. It's like your favorites tab, essentially. And created, those are the ones that you created. So we'll have the link to the discussion forum here. Currently it's linked to the Lite paper, but it will be linked to the forum. And then you can view individual proposal here with some additional statistics, such as, kind of this chart again, the status of the proposal, whether it succeeded or failed or ended, the timeline right there, and for and against, you can vote here, and you also will have the executable code. Now, anybody will be available to vote who have Casper, so you'll be very, very much incentivized to vote. Not through money, but more like if you do not vote, well, you're not part of your governance. You kind of like, well, why are you here? And any good decision, any good proposal will be directly impacting your bottom line. So this is not exactly the KPI-based thing that I want to do, the KPI-based governance, but it's a nice first attempt. I think let's pause here because it's like a lot of information over everybody's mind. Maybe the only thing that I would like to cover, last thing, is as far as deliverables. So on the deliverables front, the timeline goes like this. So February 4th to February 10th, start bridging your Casper. This is a perfect time to start bridging your Casper from Ethereum, from Sepoly Ethereum specifically to Ghost, because Ethereum Sepoly will have to be redeployed in the next couple of days. You can be redeploying the Ghost DAO with replacing stablecoins GDAI with native coins, so no GDAI anymore. It's going to be Ethereum, SEP ETH as a backer. And we're going to be introducing Ghost DAO governance for the first time ever. We never had it. That's going to be the first time, and it's going to be amazing. Hopefully, it's going to be amazing. And then February 11, roughly, that's the marketing launch around Wednesday. So it's going to be a very busy week for us as far as deployments and launches, and also for you guys as far as comprehending all this information. So if you have any questions, ask. I'll stay here like for another 10 seconds. But in case no questions, prepare. Keep checking a note. We're going to be updating the guides with additional information, additional checks of helping you guys kind of, and myself too, by the way, checking the healthiness of RPCs. We are moving very, very fast. I like the speed, actually kind of moving faster than I thought. We have a couple of additional features remaining, such as bridge out, such as ghost chain governance, and the bridging fee function. We also have some questions about GMVP Ghost, and after yesterday's discussion with the council, Mr. IDK specifically, your comment partly impacted one of the solutions that we didn't have before. So Pierre had a similar idea, and then Mr. IDK, you like implied it, and then like it kind of came out, kind of like it's kind of becoming a little bit more clear, and that solution could be very interesting about what to do with JVs and how specifically integrate peak ghosts into the Ghost DAO infrastructure. So, all right, no questions. Speak with everybody next week. Thank you so much. Have a good one. Bye.